Welcome back to AI Crypto Pulse, your premier destination for real-time market intelligence, institutional-grade technical analysis, and comprehensive digital asset news available anywhere on the internet today. Today, we are diving deep into the absolute latest price action surrounding XRP, which is officially climbing and gaining serious momentum as it builds a highly anticipated recovery wave off its recent local lows. If you have been keeping a close eye on your trading screens over the past few sessions, you know that the native token of the Ripple ecosystem has been showing exceptional resilience after enduring an incredibly volatile period of downward pressure. Right now, the charts are painting a very fascinating picture, as XRP successfully triggers an aggressive bounce, climbing back above the critical psychological thresholds of $1.10 and $1.12.5. This sudden surge in organic buying pressure has pushed the asset into a highly strategic, short-term consolidation phase, sparking widespread speculation across the global trading community that a massive macro breakout could be actively loading as the bulls prepare for a decisive, high-volume run toward much higher targets. To fully comprehend the true structural mechanics behind this sudden turnaround, we must look closely at how this recovery wave originally materialized from a purely foundational perspective. For the past several days, XRP bears were attempting to drive the asset into a deeper macro correction, but they hit an absolute brick wall of institutional and retail buy-side liquidity resting directly at the crucial $1.05 demand zone. This powerful baseline support acted as the ultimate springboard for the bulls, allowing XRP to completely steady its price action before launching a highly coordinated upward trajectory that closely mirrors the broader recovery patterns witnessed across major crypto assets like Bitcoin and Ethereum. By establishing such a rock-solid foundation at these lower levels, market participants have managed to shift the immediate market psychology from deep, fearful uncertainty into a state of cautious optimism, providing the necessary underlying strength required to steadily claw back key structural areas that were previously dominated by aggressive sellers. When we pull up the technical charts and start examining the precise algorithmic data on the lower timeframes, the bullish narrative surrounding this short-term reversal becomes incredibly compelling. A detailed look at the hourly chart for the XRP/USD trading pair, utilizing highly reliable data sourced directly from the Kraken exchange, reveals an incredibly clean, definitive breach of a multi-day bearish trendline that had been heavily suppressing price action for quite some time. This critical trendline originally presented a fierce, heavily fortified wall of localized resistance right at the $1.10 mark, acting as a massive ceiling that repeatedly rejected previous minor relief rallies. However, the sheer volume of buyers stepping in at the lows allowed the price to slice completely through this descending trendline, shifting the near-term technical bias and effectively signaling to momentum-following algorithmic trading desks that the bears are rapidly losing their grip on immediate price control. Now that this initial trendline breach has been officially secured, the digital asset is actively navigating its way through a vital consolidation phase, which is an incredibly healthy phenomenon for the long-term sustainability of this developing upward move. As we speak, XRP is working hard to establish a permanent structural foothold above the $1.12.5 zone, essentially trying to flip a historical point of friction into a brand new floor of foundational support. Veteran market participants understand completely that this type of quiet, range-bound consolidation directly following an impulsive breakout is the absolute perfect environment for the market to absorb lingering supply before attempting the next major leg higher. The ultimate focal point for short-term day traders in automated systems right now is a highly specific overhead technical barrier located directly at the $1.17.5 level, as a clear and clean breakout above this precise boundary would officially confirm that a massive wave of fresh upside momentum is entering the order books. A major pillar of this newly developed bullish thesis relies heavily on the fact that XRP has successfully managed to reclaim its positioning above some of the most widely respected institutional-grade moving averages on the shorter timeframes. Specifically, the asset has aggressively pushed its way back above the $1.12 mark, positioning its current spot price comfortably above the highly influential 100-hourly simple moving average, which is a massive flashing sign that near-term momentum has officially crossed over into a positive zone. In the world of professional technical analysis, maintaining a sustained trading structure above the 100-hourly moving average is absolutely essential because it mathematically confirms that the average buying price over the recent short-term cycle is actively rising, forcing short sellers to either aggressively cover their positions or risk getting violently squeezed out of the market as the macro trend attempts to flip back toward a heavily bullish posture. To truly comprehend the broader macro targets of this developing structure, we must plot out the exact Fibonacci retracement levels calculated from the most recent significant price swings on the daily and hourly charts. By measuring the entire distance of the recent downward move, stretching from the absolute macro swing high of $1.36.4 all the way down to the absolute capitulation swing low of $1.05.2, we can pinpoint exactly where the heaviest concentrations of institutional supply are waiting to test the strength of the bulls. Looking directly at the immediate response of the buyers, their initial ability to drive the price action cleanly past the 23.6% Fibonacci retracement level was an incredible statement of strength, proving that this bounce is backed by highly legitimate capital inflows rather than just temporary low-volume short-covering wicks. With the 23.6% Fibonacci level successfully secured as a minor intraday cushion, the technical roadmap points directly toward the next major psychological and mathematical hurdle that the bulls must completely obliterate to sustain this rally. If XRP can gather enough underlying momentum to initiate a fresh, high-volume upward push from its current consolidation base, it will immediately face its first major true test of institutional resistance near the $1.17.2 to $1.17.4 resistance zone. This specific price pocket is a highly contentious historical battleground where automated market makers and localized swing traders will actively attempt to cap the upside, making it an absolutely critical area to watch for anyone looking to gauge the true, unadulterated conviction of the buying volume entering the market during the global trading sessions. Should the bulls successfully coordinate their capital inflows and completely overwhelm the sellers at that initial resistance zone, the charts indicate a highly probable, rapid extension toward the absolute holy grail of near-term targets, which sits directly at the $1.20.8 level. This specific price point carries a massive amount of technical weight because it aligns perfectly with the 50% Fibonacci retracement level of the entire downward move from the $1.36.4 swing high down to the $1.05.2 low. In classical chart theory, the 50% retracement line represents the ultimate point of balance between buyers and sellers over a macro cycle. And securing a clean, structural candlestick close completely above this $1.20.8 barrier would fundamentally validate the entire breakout thesis, signaling to the broader financial world that institutional buyers have firmly regained control of the asset's trajectory. Achieving a historic milestone like a daily or weekly close above that 50% Fibonacci level would instantaneously send a powerful wave of pure FOMO throughout the digital asset landscape, likely triggering a cascade of buy stops and heavily accelerating the upward velocity. Once the $1.20.8 ceiling is convincingly flipped into a rock-solid floor of support, the technical charts open up a very clear, highly liquid pathway toward the next immediate structural hurdles, resting comfortably at $1.21.5 and $1.22 flat. These price points represent minor overhead cost basis clusters, where short-term profit takers might try to temporarily slow down the momentum. But given enough organic volume, these levels will likely act as mere speed bumps as the market markers aggressively reprice the asset to match the shifting institutional sentiment. If the broader cryptocurrency market remains in a highly favorable risk-on posture, and Bitcoin and Ethereum continue to provide a supportive macro backdrop, a clear and decisive move above the $1.22 resistance zone will officially open the floodgates for a massive run toward the higher tiers of the range. The next major technical objective for the bulls would be to drive the price action directly into the heavily fortified supply zone, hovering right around the $1.24.5 mark. Any further continuation beyond that point would completely solidify the asset's structural turnaround, setting up a definitive, highly explosive retest of the major macro range resistance sitting proudly at $1.26.2, which would represent a truly staggering percentage gain from the recent local lows. However, as every single veteran market participant on this channel understands with absolute clarity, every single bullish technical setup carries a significant element of downside risk that must be managed with cold, calculated precision. While the current recovery wave looks incredibly promising on the surface, we must remain completely prepared for the alternative scenario where XRP fails to generate enough organic buying volume to clear that formidable $1.17.4 resistance zone. If the overhead supply at that level proves to be completely insurmountable, or if sudden macroeconomic headwinds force a wave of de-risking across the global order books, the digital asset will likely face a sharp rejection, causing the price to reverse course and start a fresh decline to thoroughly retest the strength of the underlying demand levels below. If that bearish rejection unfortunately materializes over the coming trading sessions, the initial line of defense that the bulls absolutely must hold at all costs is located directly at the $1.12.5 level. This specific area currently represents a highly critical demand node where substantial buy-side liquidity is waiting to absorb any immediate localized selling pressure. If the buyers can successfully step up to the plate and defend this floor during a pullback, it would create a highly desirable higher-low market structure on the charts, keeping the short-term bullish narrative completely intact. However, if the selling volume suddenly intensifies and forces a decisive downside break and a daily candlestick close completely below the $1.11 level, it would completely invalidate the immediate upside breakout thesis and weaken the structural integrity of the chart. Losing that critical $1.11 baseline would instantly expose the entire XRP ecosystem to an aggressive wave of long liquidations, rapidly accelerating the downward momentum as short-term leveraged traders are forced to exit their positions under extreme duress. In this specific bearish breakdown scenario, the price action would likely experience a swift, uninterrupted slide down toward the next immediate psychological and technical support cushion, resting at the $1.08 mark. If the global order books fail to stabilize the asset at that level, the selling pressure would automatically trigger algorithmic trading bots to execute further downside targets, rapidly dragging XRP all the way back down to retest the massive, highly crucial macro demand zone situated at the $1.05 level. Testing the $1.05 zone for a third or fourth time would be an absolute nightmare scenario for retail investors who recently chased the top of the bounce, as a violent breach below this ultimate line in the sand would completely open the floodgates for a terrifying plunge into a highly illiquid market environment. Below the $1.05 structural floor, there is a massive lack of historical support, meaning that any sustained selling pressure could easily drag the token all the way down to test the massive psychological milestone resting directly at the $1 flat mark. Because the stakes are currently this incredibly high and the market is navigating such a critical turning point, maintaining extreme patience and waiting for undeniable high-volume confirmation remains the absolute greatest weapon in a professional trader's arsenal. Fortunately for the bulls, when we look closely at the underlying momentum indicators behind the scenes, they are actively validating this recent recovery wave and suggesting that the upside bias remains firmly in play for the time being. The hourly moving average convergence divergence, or MACD histogram, for the XRP/USD pair is currently gaining significant pace and expanding beautifully within the bullish zone, mathematically confirming that the velocity of the buyers is actively outstepping the sellers. Furthermore, the Hourly Relative Strength Index, or RSI, has successfully pushed its way comfortably above the critical 50 baseline level, officially exiting the dangerously oversold territory and signaling that the path of least resistance is currently pointing toward the upside. That is all the time we have for today's packed, data-driven market breakdown here at AI Crypto Pulse. So if you found this deep institutional analysis valuable, make sure you smash that like button, subscribe to the channel with the notification bell turned on, and drop a comment below letting us know your targets.